Hey everyone, happy Thursday, August 24th. It's about 10:40 on the West Coast and time for another market update. Last week was a rough one. Rates keep getting higher and higher. This week started off on kind of a similar note, but a lot of housing data to get to first, and then we'll kind of cover that stuff. First thing we got was July existing home sales. So pre-existing homes down negative 2.2%, down negative 16.6% year over year. That's not very surprising considering there's not a lot available. A lot of that obviously has to do with existing rate or mortgage rates being really high. Current sellers don't want to sell, and that's causing a backlog. And so, as I'm sure any realtor watching this knows, existing home sales is pretty low right now. So, like I said, down 2.2% month over month, down 16.6% year over year. Median home prices down 1% month over month. There was some news made about that, like on CNBC. They started, the sky is falling kind of thing, but that a lot has to do with the home mix. So remember, median is going to be affected by the price of homes sold on the upper and lower levels, and that just means that the more lower level homes are selling. So that's brought that down a little, but still it's up 1.9% year over year. Inventory went up a little tiny bit, still down 14.6% year over year. Really only about a 3.3 month supply. Normal market's 4.6. Days on market ticked up slightly from 18 to 20. But that still shows that if you price right, existing homes tend to be selling depending on the markets. And then the other thing to throw in there, Zillow updated their appreciation forecast, and now it's gone from 5.5 to 5.8. So still appreciation is going high according to most metrics. So that's something to keep an eye on. Next thing we got was July new home sales. So the opposite end in a completely different story. 4.4% year over year, or month over month, 31.5% year over year. Taking a closer look at that stuff. So annual sales pace is up quite a bit. For sale inventory is showing it up 437K, which is 7.3% reported month supply. But if you take a closer look, there's only 75K completed. So that's only 1.3 month supply. So basically houses are selling before they're even completed. I think there's 168,000 homes in this July that sold that haven't even been started yet, if I'm not mistaken. So new home sales, builders are doing pretty well for themselves, filling that gap that we saw those existing home sales being down so much. Their median is up 5% month over month, down 9% year over year. And again, consider the mix of homes sold. Builders are seeing there's a need for those lower priced homes. Those are going faster, so they're starting to build some lower priced homes. So that's bringing that median home price down year over year for the new home builds. Next thing we got, initial job claims came in this morning, expected to be about 240,000, only came in at 230,000. Continuing claims was down slightly. So the job market is still showing strength as far as these initial claims go. We'll get a little bit more into that in a second, the BLS stuff, but as far as current employers, it looks like they're trying to hold on to employees. Purchase apps were down negative 5% last week with rates going so high, and they're at their lowest level according to the Mortgage Bankers Association since December of 1995, which is a long time ago, 28 plus years. I was 14, I think. I was in ninth grade, I believe. So long time ago to get to the point where mortgage apps were this low. So again, not good with rates this high and not a lot of inventory. Miscellaneous, but really the two most important things I wanted to go over this week. First thing, BLS revision. So the BLS jobs report comes out every month. It's very, very important. The one coming up September 1st is going to be very important. But they came out with their preliminary revisions from, I believe, April of 2022 through March of 2023. And it came in at negative 306,000 revisions. So, and really led by transportation and warehousing. You kind of see the breakdown here. But the frustrating part about this is, and you've heard me talk about this before, is they come out with these BLS jobs reports. They say it's a big number. The market reacts. We get bad news. One a couple months ago really started our slide quite a bit. And then they do, a couple months later, they'll do some revisions, and those are usually negative revisions. And then they do this, benchmark revision, preliminary revision, and it's a big number. That's a big difference. I think it's, about 25,000 jobs per month, about 9% difference. So that's the difference between the markets reacting positively and the markets reacting negatively a lot of times. So it's just, frustrating that they come out with these numbers, markets jump one way, and then when they correct the numbers, the markets don't really react. We don't get that same headline number. So people have forgotten about it by that point. So really frustrating how they're doing it. And, I'll get off my soapbox on that one right now. But as you can see, maybe not the strength that we saw in the job market. They keep reporting how much strength we had, and all of a sudden we see these negative revisions. So something to keep an eye on, especially with that one coming up in September here. And then Jackson Hole Symposium. The Jackson Hole Symposium is going on right now. That is when all the Fed, or the central bankers across the country, or across the world actually, get together in Jackson Hole, Wyoming. They'll all be speaking. They'll all talk about inflation and their rates and what they'll hike and all that. Headline tomorrow, closing it out, it will be Jerome Powell, our Fed chair here in the United States. And he will talk, and we got to hope that he at least just has neutral comments. He's probably not going to say things we like, super positive things, but we don't want him piling on and talking about more rate hikes. We'd hope that they just say, let's wait to see that jobs report. Let's wait to see the next inflation reports before they make their next decision. So that's actually really important. Everything's so narrative driven. We got to keep an eye on what he says tomorrow, and let's just hope he doesn't say anything too bad and keeps his mouth shut. You didn't hear me say that. Average 30-year conventional is up to about 7.4. It actually hasn't updated today. It was up quite a bit more. It went up to about 7.49. And yesterday we had a really good day, a little bit of a rally with those BLS revisions, with some manufacturing weakness across the globe and the United States, showing maybe some recession fears. But today it's kind of giving some of that back. So let's say about 7.4 or so, which is up from 7.37 last week. Still at really, really high levels, still basically the highest in 20 years. So that is not where we want that. Important dates. We got, PCE inflation coming up next Thursday. So I have that for you guys before I do my update, which is awesome. And the very next day, though, is the really important one. That's the BLS jobs report, like we talked about. That's really important because the Fed seems to be, inflation, we seem to be winning that battle at least. There's some good forward-looking metrics. That's been coming down, but they're really, hanging their hat on these job numbers. If that job number comes in really strong, there's a really good chance that the Fed might hike again September 20th. So we got to hope, that job number is not too strong. Again, we don't want to hope for super weakness in the job market, but we want honest numbers. How about that? So we got to hang in there. Markets aren't, the rates obviously not where we want them, but they will come down eventually. I promise you that. We just got to hang in there until it happens. So if anybody needs anything at all, please don't hesitate to reach out, and I'd be more than happy to help. Have a great day, everybody.